across to Sandeep Sabharwal as well. Welcome him in the studios in Fine Art. What is it that he's expecting from Finance Minister scored today, her 7th budget? Sandeep, hi, good morning. What's the anticipation? I know no correction is anything to worry because if election outcome is anything to go by, it will be lapped up in no time.
Yeah, so I think one is the liquidity story, which is the domestic liquidity gushing around. The second is the overall valuations, like Nikunj was saying, like at market cap to GDP of 155%, at valuations which are much higher than historical valuations. We need the budget to deliver actually for the markets to move higher. So my view is that if the budget disappoints, and I think the only way it can disappoint is if they don't give relaxation on personal taxation. And those have to be significant. I think incremental tweaks here and there and announcing them as big tweaks or big changes is not going to help. So they've got a buffer of 1 lakh crores through the RBI dividend. They should be bold and give around 1.5 lakh crores of relief to individual taxpayers, because the multiplier on this is very high. So 1.5 lakhs crores of tax break can actually lead to ultimate incremental consumption boost of nearly 3 times of that, 4.5 lakh crores. So if 4.5 lakh crores get consumed more, they can actually get GST on that, which itself covers half of it. So I think it's a simple math. Whether the bureaucrats in Finance Ministry want to recognize this or not is something we need to see.
You don't think any curb on FNO is going to come under the purview of the budget? That's going to be SEBI's domain?
Yeah, it's SEBI's domain. They have to come out with the consultative paper first. So I think it's a process. It's going to happen, and it's a given now, given the announcements which have been coming through both by the SEBI chief a few days back at an event, and yesterday economic survey. So the curbs are going to come. The extent of the curbs, what are the pressures the exchanges are putting, because their profitability gets impacted substantially, brokerage profitability gets impacted. But I think it's very clear that the curbs are coming. It's only a timing issue.
But it won't be via the route of an STT increase, you think so?
STT increase makes no sense, because for a compulsive punter, it's the margin he has to put. So as long as he can put 1.5 2 lakhs of margin, he'll punt irrespective of whatever is the STT, whatever is the tax. Those things don't impact. The only thing which impacts him is that he should be unable to trade, and that's the only way it's going to get curbed.
Okay, so those were the discussions on STT, but you talked about how consumption could be one of those areas to watch out for, and I was just highlighting that data. 9 out of 10 times FMCG index has ended in the green, ITC so as well, and that's because there have been announcements to spur consumption. Are you willing to make fresh bets within that sector? And if yes, are you looking at durables? Are you looking at QSR? Are you looking at perhaps staples? Which category would you first go to?
So I think the most beaten down sector today is the QSR space. You look at stocks like Westlife, Devyani, Jubilant Food, or any of them. That's hardly revived. So I think any tax break which comes through on the personal, so it will be a definite boost to those companies, and that coming on the top of what's a normal monsoon or above normal monsoon, which will ultimately lead to lower food inflation and higher boost overall consumption. So I think things are in place for a consumption boost in India. The only thing we need is some tax incentives to go and supplement it. In any case, there will be a revival in consumption, but then it will be muted if there are no tax breaks. If there are tax breaks, then I think it can be significant. So I think the QSR space would be first, the durables would be next, and then the consumer non-durables.
Okay, so consumer, durables, and then non-durables, that's the pecking order. But what would it take for interest to come back in intra-EPC players? And I'm talking about Dilip Bilkons and PNC, etc. of the world, and not just L&T, because they have fallen off the investors' radar. What do you think will kind of get the investor back to these companies?
See, while the overall infrastructure investment cycle has been very strong, the road sector is something which has, where we've seen it fall off sort of. So it's gone into a plateau. It's actually declined last year.
It's not fashionable anymore. It's all about defense and railways.
Defense, railways, or other infra projects like the power projects are getting set up, transmission towers are getting set up, data centers are getting set up. But the road sector still needs huge investments. We've seen the state of Nasik highway, Goa highway, everyone is highlighting that. So I think there is investment required there, and many of these companies were deeply focused on only that sector.
True.
And those are the ones who are suffering right now. The rest of the infra space is fine.
Interesting. So that's the view coming in as far as infrastructure is concerned. But what about financials? Because a lot is expected for MSMEs as well, because that was one of the focus areas. Economic survey talked about how you need to kind of deregulate a lot of sectors as well and provide that push to SMEs as well. Is that something from the microfinance scene that you'll be watching out for?
See, the flow through of economic survey to budget typically historically has been very low. So I don't know what they can do. I think the thing which they did where you have to pay the MSMEs within 45 days, otherwise you can't account for it in your expenses, etc. That itself was a very good initiative. I have specifically seen companies or talked to companies who have said that this has greatly benefited them actually.
Okay, so that's the view coming in. Those were one space which has been overheated per se, but what's the take, Sandeep, on PSUs? Book profits out or stay tight?
I think the valuations are excessive in PSUs, and most of the companies like some companies have seen some improvement in fundamentals, but most of the companies have just got re-rated. So companies which were trading at a PE of 10, they are trading at a PE of 70, 80. So I think that's the risk in PSUs, and people should be careful. I would think that the probability of a corrective move is much greater than significant appreciation from here.
Okay, so that's the view coming in as far as PSUs are concerned as well. But overall, that's the take as far as the budget is concerned. Continuity is something the markets are watching out for. So the entire push on capex and manufacturing and PLI schemes that has worked wonderfully well. In fact, that's the next question. All those PLI schemes that have come out, they have definitely kind of spurred manufacturing. What more can the government do? Could there be more extensions? Could there be more tax stops available in terms of making fresh investments, greenfield, brownfield, etc.? What's your expectation?
See, the government is sold on the idea of PLIs, so I think they will do more initiatives out there. In my view, an overall benefit which is given to all companies is much more beneficial because it does not distort the market. However, there are talks that there will be further PLI announcements, so I think that's
Pardon me for that interruption. I'll have to just cut you there. Let's take a break.